Hello there, everyone, and welcome to this episode of the podcast. Now, today we are going to talk about a massive story that has been out, sort of broke yesterday, caused all sorts of problems and uproar, and that is the story of DeepSeek, right? I am joined today by Gabby Palinskate, who is a Watson's Daily ambassador, and what we're going to do today, we're going to talk about the story so far, how it impacted, what the impact of this story is, and then we're going to just talk about a few thoughts regarding this story and look ahead to the future. So, without further ado, Gabby, could you tell us the story so far, please?
Yes, so DeepSeek is an AI model created by the hedge fund Highflyer, and he's basically created this.
By the way, Highflyer is the name, for the viewers, listeners. Highflyer is not just he's a high flyer. That's actually the name of his. That's actually the name of his company, right? So just to clarify that for people. Sorry, carry on.
And he's basically created this AI model to rival OpenAI's ChatGPT, and the story's kind of taken off mainly because it's been created using fewer chips, less people, less money to achieve the similar results that ChatGPT, I believe it was 4.0, managed to achieve. And so with this, it has led to exponential losses within the shares of companies like Nvidia. And while they have bounced back today to a certain extent, it's not by a lot. And so this has led to questions of is this idea of using more and bigger is better, whether that is actually an applicable way to move forward within AI.
Mm-hmm. Okay, I mean that's the thing, isn't it? I was saying Watson's Daily today that yesterday the share price of Nvidia fell by whatever 600 million, 600 billion. What am I talking about? $600 billion, right? And just the scale is enormous. It's worth that drop alone is worth more than a third of the FTSE 100. So that is the total of the top third of the biggest companies in the UK all put together. That's how big the loss is. So that's why. Sorry, I know. I mean, I sound like I'm ranting here, but it's sometimes when you hear these big numbers, it's difficult to understand just how big this really is. So that's why I just wanted to reiterate how massive the fall was yesterday. You're absolutely right. I mean, obviously, the stock's share price fell. Questioning, it does make you question the model because, as you said, there's a lot of investors throwing a lot of money at this. And it's the thing is really whether it's this upstart coming along with its supposedly $6 million, not billion, $6 million it's to train this model to achieve similar results to a ChatGPT model. This suddenly makes you want, and the fact that it didn't use the latest stuff and it didn't use all of those resources that are available to OpenAI is an impressive achievement. Some people in the press were sort of saying, questioning, they're saying, is it really that good? Is that 6 million an exaggeration? I said, well, might be. The other thing is, did they get any of those advanced chips by the back door somehow? I mean, okay, maybe they did. Maybe it's not $6 million. Maybe it's 8 million, or maybe it's 10 million. but it's a lot. Whatever it is, it's going to be a hell of a lot less than than it's costing OpenAI and all the others right this moment. So I think that this is an absolutely massive story because it really does turn the conventional wisdom on its head. So I guess just to throw out some thoughts on this. So one thing that I'm seeing a lot of at the moment is people making comparisons between this and the dot-com bubble bursting. And I think there is something to be said for that, because the back in the dot-com days, and yes, I was around at that point, I remember that the valuations were sky high. Now, this is very, very crude way of explaining it, but what often happens is you see so you get a company, it has a good idea, people start liking it, right? The share price starts, it starts going up, but it's still, it's undervalued for what it is, right? Value investors come in at this point, so they look at the company, they look at the parts, the different, how much the parts of the company are worth. They look at maybe if they can see what the order book is like and make projections on how that's going to change, and then and then they buy, right? Because the deep value investors are ones who they look through all the hype and they really go drill down into the financials. I mean, others would say they do that as well, but anyway, they really drill down. They go, no, fundamentally, we think this company is worth more. Now, how much is a company worth? Again, very, very rough and crude explanation of how people come to a valuation of a company. So what happens is analysts around, financial analysts, they have a massive spreadsheet. They chuck a load of numbers in it, and basically that spreadsheet spits out a valuation for that company, which is then translated into how much is each share worth. And that's what the share, so it's worth this much per share. So they'll have a share price target, right? But anyway, this is something that happens. So you start off with the deep value investors, then it starts going up as more deep value investors start investing and seeing the inherent valuation of a company. Then you start getting normal investors coming in, and they say, yep, this is, we like this, we like the story, we can see the potential here, we couldn't see it before, but now we can. Then it keeps going up, and then once the valuation starts going up, keeps going up, the metrics that were used by, say, the deep value people start to look vulnerable. They look expensive, and then those kinds of people stop investing, and then you start seeing other investors who are momentum investors start coming in, and basically they're buying the stock not necessarily because of fundamentals particularly, but because it's going up. They're just like, well, that's been going up for a while, looks like it's doing quite well, order book's reasonable, yeah, I know, like, PE ratios and that lot, yeah, it looks probably a bit expensive versus others, but it's just keep going, momentum, boom, and they put the money in. So that powers it. Once you get past that stage, and that can go on for quite a while, then what seems to happen to me anyway, is this sort of personal observation, is that you start getting, usually some bright spark at an investment bank invents a new way of valuing company, which suggests a high, which justifies a higher valuation, so they can still have an excuse to recommend buying it. And this has happened. I mean, it's usually someone like a Goldman Sachs or like a McKinsey type person, and sometimes they may even, give it a fancy name, and they may even trademark that fancy name as a valuation method, right? I think I'm not in a. What was it called? Embedded value. I remember that like years ago, there was one guy, I think it was called embedded value. Anyway, so they do this, they make it up and they give it a name, and then they say, okay, everyone, yes, all these fuddy-duddy old ways of valuing it, they're rubbish, they don't take into account this, or they take this into account, they shouldn't take it into account. But but look at mine, and this justifies a higher share price, right? Once that starts happening, you start thinking things are getting a bit ridiculous. This feels like a bubble, and that's kind of what has been happening with AI. So this is a very long-winded way of saying, yes, there are parallels with the dot-com bubble, and in a similar way with AI, everyone's just bought into AI, that they're thinking, well, it's just growing, everyone's putting more money into it, we need it, it's cool, so yeah, and they just chucked money in. So that's one thing. So that in terms of the similarities, I mean, what do you think of that? I mean, I know you weren't around at that point, or if you were, actually no, you weren't. You probably weren't, were you? So that was yeah. Yeah, that's right. Yeah, so you might not have been interested at that point. But anyway, yeah. Have you got any thoughts on that?
I mean, I think there is definitely those similarities that, that kind of idea of high valuations that are based upon very weak foundations. And
Yeah.
the more these valuations skyrocket, it almost does become a pressure point of what is going to be the linchpin that kind of takes out all this motivation towards investing. And
Yeah.
all these, and I mean, I was going to ask, do you think it's mainly an American thing that's kind of investing into all these companies? Because these are all American based, especially OpenAI.
Yeah. I mean, I think it is because America seems to attract, tech generally, and as I think it was Jeff Bezos said fairly recently, one of the reasons why America does well with tech companies and say Europe doesn't, or not to the same extent, is because the risk appetite over in the US is higher. So more investors in America are willing to risk more money in companies that promise a lot for the future. So they're growth companies, but basically these are companies that probably don't have that much now, but they have a huge potential. But it's very risky because they might not reach that potential. But in America, investors are more inclined to give that company the benefit of the doubt than, let's say, in London, where they'll go, I don't know about that. Oh, I've seen this before, and yeah, I mean, on that valuation metric, it's a bit tricky. No, thanks. Whereas in America, they're like, yeah, we've seen this before. Okay, there are risks, but hey, let's buy in because you never know. I mean, it's not exactly like that, but it's kind of certainly that's the way it's seen. So yeah, that's why, and that incidentally, on a side note, that's probably why a lot of, especially tech companies, prefer to go to the US, because they think they'll get a better go. I mean, that's why, like I was saying the other day, that eToro doesn't want to list here, wants to list over in the US. But anyway, sorry. Any other questions at all?
Yeah, I was just going to highlight that that's kind of how like Nvidia saw its rise, wasn't it? In terms of America, a lot of American investors kind of happily throwing their money at it and seeing if it works.
Yeah,
and that's kind of how it saw its skyrocket within shares.
Yeah, because they're basically saying, well, the good thing with Nvidia is it does actually make stuff. It does have physical stuff, and there is huge demand for their stuff. So they're not a bubble per se, in the sense that there is something behind it. Whereas the bubble, something that is like a bubble and a bubble bursting, tends to imply that there isn't actually that much substance. But to be fair to Nvidia, they do have substance, so maybe that will help. But anyway, yeah. So in terms of other things, then, yeah, I mean, I think that as we're on the subject of Nvidia, I guess this could be. I mean, this sounds. It could be good or bad, really, for Nvidia. It might be great for sales of their non-latest chips.
Yeah.
It might mean that might be good because it might benefit customers who are getting the you know the latest versions, because what it might do is it might mean that some who thought they absolutely positively had to have the latest version think, hold on a minute, well, the Chinese have done this with a previous version, so yeah, actually save myself a bit of money,
Yeah.
I'll go for the previous version. So that might be good for them in terms of sales of their less advanced chips. It also may, the other thing you wonder is this going to mean that America is going to stop more advanced chips going over there? Because they say, well, look, if they can do this with not advanced chips, just think what they could do with the latest chips. Or will they go, don't worry about it? I mean, look, they're going to do something anyway, so we might as well make money out of it. Because that's the problem for Nvidia, right? Is that it's all very well for the president to say, right, we're not going to send them anything. But Nvidia's there saying, well, look, we make this product. It's really good. They want it. Why can't we sell it to them?
Yeah.
So it is a tricky one. But yeah.
Do you think that this kind of DeepSeek coming in is almost going to be AI's kind of Sputnik moment, kind of bringing in this almost competition between the two countries that are already quite economically at battle with each other? Do you reckon that will start almost?
Yeah, I mean, I think that what this is it's a wake up call. It's a wake up call because it says, hey, everyone, you don't have to have the biggest and best and most money all the time. And so you can actually do something impressive without all that. So if that's the case, I think it's a good thing. Yeah, it's a good thing for all concerned. It's good for China because obviously, DeepSeek is going to be is a hero, in China. Over in the West, I think it's going to mean that they are very, maybe a bit more humble about what they do. So that's another thing. And just as a sort of another thought on this, it feels to me like this whole situation encapsulates for me what I feel. This is just a personal opinion, and it is a general opinion, but it does reflect what I feel is what is often a tactic that Americans use for a lot of things, not just this, but is what I'd say a scorched earth approach. They will throw everything at something. They have so much resource. They throw money, they throw technology, they throw expertise at something to just suffocate it. And then maybe walk back and maybe either just continue to walk back or just then come back and revisit. Whereas I think that other countries have less resource and therefore they have to be smarter with what they have. So they'll say, well, look, we don't have this money, but we do have that. And actually we have the expertise here and this and this and this. So, and then they concentrate their efforts. And this is what appears to have happened here, in that China has concentrated on the right things. They got the expertise. The guy paid the engineers the most, because he sees them as the key resource for getting the most you possibly can out of each chip. So yeah, I mean, I think that this does bring into question the in terms of the future. So we'll talk about the future. I would say, so in terms of the future, I think that this will mean that they're more efficient. That we're going to have to be more. Yeah. So AI is going to have to become more efficient. I think that AI is going to have to become more accountable. So instead of all these companies just throwing money at AI, Open AI, and saying, "There you go, that's all good. Yeah, look, just take our money, go away and do something impressive with it." They're going to actually now think, "Well, hold on a minute. Maybe we don't have to give you so much money if you can be more efficient. If you can be efficient with it, that would, we'd like to see evidence of that." And we'd also like to check in every now and again and see what our money's doing, rather than just entrusting them with it and just saying Sam Altman going, "Thanks very much. Yeah, see you next year when we come back for more money." They're actually going to have to do something for it, show something for this. And then I think that there also may be less money going to data centers as well. So because maybe investors will sit back a bit and think, well, let's just see what our money does for us now, rather than just keep plowing it all in there. But yeah, I mean, do you have any thoughts on that?
I believe it's quite an interesting thing to look into what Donald Trump's response will be now, in terms of, will he double down on the restrictions that have previously been imposed on that kind of chip sharing?
Yeah.
And because there's almost two ways that it could go, in terms of Trump kind of waving his hand and going, "Oh, let's not." It's realistically, it's probably just a one-off.
Yeah.
Or it could be him going, "We need to restrict further to try and kind of increase America's prowess." He's already got this mandate of trying to assert America and make America great again, as his slogan says. So they suggest that he's going to double down on that, and then perhaps almost isolate America in terms of AI technology development. Because it's likely to happen is, as you said, other countries are likely to pick momentum up by thinking, well, we can use things that aren't as advanced in order to advance our technology. So even in the UK, with Keir Starmer wanting to progress UK's stance within technology, that could see America being cut off in those kinds of ties with other countries.
Yeah, and actually, another thing that occurred to me when you were saying that about Trump is that maybe this is going to. I mean, maybe Elon Musk is going to be. This is going to give him a bit of an in, because to be fair to him, I mean, he's built XAI very quickly.
Yeah.
And if anyone can be efficient about this, it's him.
Okay.
So again, you wonder whether his Doge, Department of Government Efficiency, I mean, this could be quite a nice deal for him, couldn't it? I mean, he could go, I mean, I've no idea. I'm just speculating, but, it makes sense. He's got XAI. We've seen that efficiency with AI can yield results. He is, supposed to be looking at efficiency. Maybe he could do that.
Yeah.
But anyway, we shall see. But well, look, I mean, I think we'll leave it there for today. Thank you very much, Gabby. It was great, and it may be. I'm trying to see if I can do another a podcast on this with an AI expert, but we shall see. Hopefully, I will, but I don't know. So we'll see how it goes. But anyway, thank you very much, Gabby. Brilliant to talk to you, and we'll be back again very soon. So many thanks.
Thank you.
See ya.
Bye.
Bye.